Hi everyone, welcome to today's webinar with me, Isaac, your speaker. Now, before I begin, just want to be clear that you guys can see my slides, hear me loud and clear. If you guys can, please leave a comment in the question box below. Hi Aloysius, hi Angelo. Okay, great, thanks a lot everyone. Okay, really quick replies there. Okay, so let's get started. Right, today we are going to be covering Fibonacci extension strategies. All right, unlike the Fibonacci retracement, there will be no part 2 for this, from my understanding, right? So it's really just Fibonacci extension strategies that I will be sharing with you guys today. Right, so before we go in, there will be a quick disclaimer. All right, understand that information contained in this material is really intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, understand also that FP Markets has made effort to ensure the accuracy of information at date of this publication. All right. However, they are not liable for any loss or damage arising in any way. Okay. With the information provided here, but you guys have my words that as presenter, I have done my due diligence. All right, to ensure the accuracy and completeness of the information provided at this time of the presentation. All right, so with that, we can begin the webinar proper. Okay, Mervin is saying that he can't hear me. Can the rest of you hear me? Okay, thanks Moon, thanks Angelo. Okay, so Mervin, if it's I'm thinking it's an issue on your end, so you can log out and log back in anytime, right? Okay, so hi Bartholomew, good day to you as well. So for today's webinar, this is really what we will be covering. Okay, again, an hour, all right, 45 minutes to an hour is really not enough to properly explain to you guys Fibonacci extension. But what I will do is I really will do my best, pick out the best points, all right, and give it to you guys. Okay, so sit tight, hang in there. All right, this is going to be fast paced. I hope to be as clear as possible, and I'll explain to you guys as much as I can about Fibonacci extension. All right, so this is really the agenda for today. Okay, so we will be covering ideal market structure for Fibonacci, and then I will also be covering Fibonacci best practices, and I will then move on to share about how to use the Fibonacci extension correctly. Right, retracements complicated enough. There are two points. Now when we talk about Fibonacci extension, we're looking at 3 points. Okay, too many cooks spoil the broth, right? So sometimes keeping it as simple as possible, especially when it comes to trading and technical analysis, that in my professional experience is really the best. All right, and then after that, once I've covered all these 3 sections, I will move on to combining extensions and Fibonacci retracements. Right, so really this Section 4 is really about finding Fibonacci confluence levels by using extension and retracements. Okay, so for those of you who are regulars with me, right, I do recognize quite a number of regular names. Okay, so for those of you who are regular, bear with me. Right, for those of you who are new, okay, I don't have a question and answer section at the end of the webinar. I like to keep my webinars interactive and sort of free flowing, okay, so that you guys know that you're not talking to a robot, right? And if you guys have any questions, feel free to fire away. No point raising the hand, all right? Just type your questions in the question box in the Citrix panel, and I will do my best to answer you guys as we go along. All right, if there are multiple questions of the same kind, okay, I will group them together and I will reply them. All right, if I miss your questions, okay, feel free to send in, just spam me. All right, don't feel bad about that. Just spam me until I get to your question. Okay, so with that, let's really cover, right, what is the ideal market structure for Fibonacci. Now, as I've mentioned earlier, okay, Fibonacci extension is different from Fibonacci retracement, right? The very fundamental difference is really the fact that Fibonacci extension takes 3 points. Okay, Fibonacci retracement takes 2 points. So it's relatively easier to make use of Fibonacci retracement. I personally use more of Fibonacci retracement rather than extension, because extension can be very tricky, right? We already have trouble mastering Fibonacci retracements. Fibonacci extension is going to be very complicated. Okay, so Kamis, wow, we even have people from Egypt, right? Thanks a lot. Okay, so yeah, nice to meet you. I'm over here in Singapore, and I wish you trading success as well. Okay, so how do we use Fibonacci extension correctly, right? Some set of a few criteria has to be met first before we can actually start using Fibonacci extension correctly. So what do we mean? What do I mean when we say we need to have an ideal market structure for Fibonacci, right? So Fibonacci retracement, you identify the swing highs and swing lows. Fibonacci extension, do we look for swing highs and swing lows? Yes, we do. However, there's another additional point in the middle. So where does that point go? All right, I will share with you guys in a while. All right. So we first, before we draw Fibonacci, whether it's retracement or extension, right, we need a very distinct kind of market structure. Okay, so I have prepared some examples here. Okay, so this is an example of an unclear market structure, right? So an unclear market structure here is choppy. The candles, one day it's up, one day it's down, one session up, one session down, and at the end of the day, it's trading within a broad range, right? So we see a lot of spikes. Let me just bring out a drawing tool. We see a lot. Okay, I'm going to change the color. Okay, we see a lot of spikes, right, all around this area, right? Very unnatural spikes. Okay, so really a lot of spikes. Sometimes there are gaps, and look at this huge spike here, over here. And on the whole, in general, it is very choppy, right? So I would say that this is an unclear market structure. Looking at candlesticks is already messy. You can make it slightly less messy by using line chart, but line chart is going to show you that the movements are very choppy as well. It's not going to be clear, right? So unclear market structure like this normally happens on cross pairs, right? Especially exotic crosses, okay? Or they happen on pairs like Aussie Kiwi, right? In my professional experience, I think Aussie Kiwi is one of the worst pairs to trade, right? Especially if you are a swing trader or day trader, really one of the worst pairs to trade for Aussie Kiwi, right? So I really stay as far away as possible from Aussie Kiwi, right? So that's one of the pairs that I just try my best not to touch. Okay, so pairs like this that are choppy, any instruments, any asset classes that are choppy like this, right? It is a nightmare for Fibonacci users. Okay, so we want to try to stay away from a market structure that is like that, right? What kind of market structure do we therefore look out for? Okay, we want a market structure that is clear, clean, clear, and ideally prices trend nicely, take a pause, goes into a consolidation phase, and then after that continues its trend again, or price will reverse, right? So that is really how the kind of market structure that we want to look out for, right? So you're absolutely right? We want a market that is trending. Okay, but some of you will actually say, hey, Isaac, in the lower time frame, right, like the 30 minutes, like the 15 minutes, right, because I'm sure some of you here are scalpers. We have a lot of attendees here, right? So I'm sure some of you here are scalpers. Okay, so you guys will say, I'm a scalper. I don't like to trade for the long-term trend. I just like to fade off the support, the resistance levels. I like to play the bounce off these key graphical levels. So can I still use Fibonacci? Yes, Fibonacci extension and retracements can be applied to any time frame, all right? And it can be used on any asset classes. The only thing that you really need for Fibonacci is you need to have clear market structure, right? So whether it's retracement where you identify swing highs and swing lows, okay, or it's Fibonacci extension where you have to look at 3 points, swing highs, swing lows, and try to identify the zigzags, right? You need a clear market structure. If you don't have a clear market structure, it is really going to be a nightmare for people that use Fibonacci tool. All right, so this, I hope you guys are clear on this, right? Okay, every now and then I'll try to drop sort of quiz, okay, to make sure that you guys are following me. Okay, so Rajan, you're asking, are extension and retracement the same? Okay, they are not the same, right? Retracement takes 2 points. Okay, so a retracement, Fibonacci retracement. Let me just quickly show you guys. Okay, Fibonacci retracement. Okay, Let me just change. Okay, never mind. I'll just open this chart up. Fibonacci retracement takes 2 points. I have the retracement tools here. It takes 2 points, right? It takes 2 points. Let me include the trend line. So you can see it takes 0.1, 0.2, right? That is Fibonacci retracement. Okay. Now Fibonacci extension takes 3 points: 0.1, 0.2, 0.3. All right, that is a Fibonacci retracement. It takes 3 points. And I want to show you guys the trend line. Okay, so it takes 3 points. So extension and retracements are different, right? They are fundamentally different. Okay, now then some of you are going to ask me this same question. Isaac, what is the difference between Fibonacci extension and Fibonacci expansion? So two different words, right? One is extension, one is expansion. Okay, now essentially extension and expansions are the same. All right, they are the same. Okay, okay, Prat, you are saying that the page is not legible. I do not understand what you mean by the page is not legible. All right, if any of you have issues seeing my screen or the numbers are too small, please let me know. Okay, so extension and expansion, all right, they are essentially okay, not clear. Wait, okay, which part of my screen is not clear? Aloysius and Prat. Okay, the numbers are too small, is it? All right, unfortunately, I'm going to try to zoom in. Hang on, let me just, okay, it's going to look like that. Okay, is this big enough? Hope this is big enough for you guys. White background. Okay, so much better. All right, okay, I'll just maintain this zoom for you guys. Okay, so maybe I can make the background a bit darker, right? Something like that, a bit more gray. Okay, not totally white, so there's a bit more contrast. Okay, so okay, let's quickly move on, right? So some of you might ask, what's the difference between extension and expansion? Okay, at the end of the day, there are no real differences. Okay, no real differences between extension and expansion. Okay, now an extension basically shows how far price can extend, right? How far price can move out of the usual range. Okay, and an expansion is also essentially the same thing, right? How far Fibonacci levels can be expanded. All right, so don't be confused. Okay, there are a lot of times in the technical analysis in the TA world where many jargons essentially mean the same thing. Okay, so some people like to rebrand a lot of candlestick patterns, and from a hammer they can I don't know, maybe call it Thor rising from the ground or something like that. Okay, so many names in technical analysis. Okay, it's essentially they essentially have the same names. All right, okay, so with this, all right, we back to the topic. Okay, we need clear market structures in order to use Fibonacci. All right, if we don't have a clear market structure, right, there's really no point in using Fibonacci at all. Okay, so Aloysius, you have a question. How do I draw Fibonacci? All right, are you referring to how I use Fibonacci extension, or how do I pull out the Fibonacci tool? All right, so this is not FP's platform, right? FP, we have a platform on MT4. All right, let me just try to pull it out for you guys. Okay. Okay, so we have the FP MT4 right over here. If you want to draw Fibonacci, you can actually look at the top. All right, at the top, you can just right click, select customize, and you can actually look for Fibonacci expansion. Okay, and then all you have to do is click insert, and then once it moves from the left to the right, you click close, it should appear at the top. Okay, so at the top, there's Fibonacci expansion tool, right? So you can actually draw. Give me a moment. All right, you can actually draw and control the expansion. You can even right click expansion properties and change the Fibo levels yourself, right? So it can be done on Fibonacci, on MT4 as well. All right, so okay, so Aloysius, you're saying you know where to start and where to finish. Okay, we will get to that very quickly. All right, so that is understand first and foremost clear market structure, very important. All right, now that we have moved on from clear market structure, okay, let's get to Fibonacci best practices. All right, what do I mean by Fibonacci best practices? That means how do I know, okay, how do I know that my Fibonacci is drawn as proper as possible? All right, let's go, let's take a look. Okay, now one of the key guiding principles that I always share with people that I teach, okay, or I share my best practices with when it comes to Fibonacci, whether it's retracement or extension, right? I use this thing called the Fibonacci Trendline Principle, right? Okay, so I see some of you have hands raised, right? I've mentioned try not to raise your hands, okay, because it pops up and it's a bit distracting, right? I rather see a question bubble. Okay, so I have the Fibonacci Trendline Principle over here. Okay, now as you can see from the picture, right, this is a clear market structure. Okay, price comes, let me just change the color. Price comes all the way down and then it pushes up in a zigzag manner. And then after that, almost similar to the first movement, okay, it makes a generally strong downwards trend, right? So when we have a clear market structure like that, we can draw our Fibonacci levels. Okay, so now that we are going to draw Fibonacci extension, we can look for the swing highs, right? So the idea is from one swing high, okay, let me just change the color here. Okay, one swing high for extension to swing low. Okay, so this 0.1 of the Fibonacci extension, this 0.2 of Fibonacci extension, and then to another swing high again, right? So this is the first point, second point, third point of Fibonacci extension, right? Ideally, theoretically, that is how we draw Fibonacci extension. All right, Aloysius, so this is how we do it, right? We need a clear market structure where we identify the swing highs and swing lows, and then we can draw Fibonacci extension from one swing high to a swing low, and then the third point at another swing high again. So you can see over here, let's say we're drawing a Fibonacci extension on this clear market structure, right? This is the starting point, 0.1 starting. We draw down to 0.2, the middle, which is a swing low, and then we identify another swing high, and then that's our third point. That's the ending point, and you can see that the 100% Fibonacci extension is projected to the bottom where price touches it. Okay, price comes all the way down, touches it, bounces off immediately. All right, so how do we, apart from a clear market structure, how do I know that this is a good way of drawing Fibonacci extension, right? You know, Fibonacci has this trend line. Okay, just now I activated the trend line, right, on TradingView. It has to follow price movement closely. Okay, so let's go back to TradingView. All right, I'm gonna remove all drawings. Okay, and I'm gonna clear all drawings over here. Now, I want to show you guys something like that. Okay, let's say, okay, I'm gonna just draw Fibonacci extension. Okay, you guys can see Fibonacci extension, right? Okay, so all these are the extension levels. Okay, this being 0.1, this being 0.2, swing high, swing low to swing high, and then to another swing low, this being 0.3. Okay, so when we draw Fibonacci extension, okay, we want to follow the Fibonacci trendline principle, which really means that price should try to be as compact, as close to the Fibonacci trend line as much as possible, right? So this is an easy concept to grasp, especially for those of you who have a strong foundation in statistics or econometrics, right? Basically, where you guys actually touch a lot on regression principle, right? So a simple linear regression would be something like that, where price actually, okay, let me just change the color. Okay, let's say price actually moves very close to the trend line, right? So this is a good 0.1 to 0.2. However, from 0.2 to 0.3, if price actually deviates like that, and then suddenly it comes all the way up and then it goes back down, something like that, to 0.3. This is a bad example, all right, of drawing the Fibonacci expansion. Okay, this is a bad example of drawing a Fibonacci expansion because look at the trend line here. Okay, 0.2 to 0.3, the trend line, price doesn't stick close to the trend line like it does from 0.1 to 0.2. In fact, if you want to draw the correct Fibonacci here, you should draw 0.3 over here instead. Right, you should draw 0.3 over here instead, where you see price actually sticks very close. Okay, you see price sticks very close to the trend line. Okay, Surya, there's no need to see the candlesticks, right? I'm not showing you candlesticks right now. Okay, the candlesticks are all the way below, right? No point showing you the candlesticks right now. I want to show you the concept of Fibonacci extension. Okay, no point seeing the candlesticks when it's tough to grasp the concept of Fibonacci extension. Okay, so I hope you guys understand the trendline principle. Do you guys understand the trendline principle? If you guys understand, just a quick yes or letter Y would do. Okay, so this is the guiding principle for extension and retracement. All right, so Prat, you have a question. Okay, swing high to swing low. Okay, swing high to swing low to swing high Fibonacci extension will be for a downward trending chart. All right, over here I have, okay, let me just erase this again. Let me erase this drawing. And I'm going to expand this whole thing out. Okay. Okay. So we have over here, okay, 0.1, 0.2, 0.3. All right. And let's say price has a swing high to swing low. Okay. Okay. So swing high. Okay. Wait. Let me just draw. Okay. So from a swing high, an example, a swing high to a swing low to another swing high again. All right, so if you're going to draw Fibonacci extension with this being 0.1, 0.2, and your 0.3, okay, so yes, this will be in the direction of a downtrend. All right, so you are actually trying to see, all right, you're actually trying to see, okay, I don't want to be misleading, so I'm going to extend the lines to the right, okay, 0.1, 0.2, 0.3. You're actually trying to see how far price can extend downwards. Okay, whether price can extend to 100%, price may extend to 127.2% of the initial move, right? So this will be a downward trending chart. For an upward trending chart is the exact opposite. All right, you have a swing low to swing high to another swing low, right? So 0.1 swing low, 0.2 swing high to 0.3 a swing low, and then you draw Fibonacci extension 0.1, 0.2, 0.3, and you're trying to see how far price can extend upwards. Okay, so yes, Prat, you got that concept of how we actually use Fibonacci extension. All right. Okay, so with that, since you guys are clear, okay, Rajan, you're asking extension needs 3 points and retracement only need 2 points. What could any other difference between in terms of predicting next support and resistance? Okay, Rajan, I'm not sure I actually understand this question. What could I think you're asking for difference between of predicting next support and resistance. Are you asking that? Okay, so I don't want to misunderstand your question. So maybe if you can try to answer that, I will get to it. Okay, so Bartholomew, I'm basically extending distance from 0.1 to 0.2 from 0.3. Yes, ideally, okay, extension is to find, right, resistance. Okay, if the trend is upwards, right, if the trend is upwards, right, let's say the trend is upwards, okay, price is upwards, right, and then there's a swing low here, so this can be 0.1, there's a swing high here, this can be 0.2, there's a swing low 0.3, right? What I'm trying to find is where are the resistance levels where price may end up. Okay, and the opposite is true in a bearish market. Okay, the opposite is true when we are in a downtrend, right? So 0.1, all right, a swing low, 0.2 swing high, and then a 0.1 swing high to a 0.2 swing low, and then to a 0.3 a swing high again. I'm trying to find the extension of where the support price could be in a downward trending market. Okay, so Robin, you're asking, do I draw this only on line chart on candlestick? No, please draw it on candlestick. Okay, I'm showing in line chart because it's easier to grasp the concept like that. Okay, so please draw it in candlesticks only. All right. So Andres, I hope I got your name correctly. All right. Pardon me if I mispronounce it. Okay, where is the starting point to start drawing Fibonacci extension? Right. So that is the next section that we will be getting to, right? It's really the crux. Okay, now that I spent a good 25 minutes, right, understanding the ideal market structure and the Fibonacci trendline principle to get a correct Fibonacci drawing, right? I want to show you guys how to draw the extension now. Okay, so this is the trendline principle. All right, so now we move on to what my army officer used to tell me, you know, is the meat patty, right? The most delicious part of the burger. Okay, so in order to use Fibonacci extension correctly, right, there are two patterns that I want you guys to understand, right? Two patterns, okay? Two very important patterns when it comes to Fibonacci extension, okay? Okay, so give me a moment, right? Okay, are there any questions? Okay. Okay, no questions. All right, so let's look at this. Okay, combining extension. No, sorry, using Fibonacci extension correctly. All right, so there are two patterns, like I mentioned. They are very important patterns, and I would call them the zigzags. Okay, this is how I actually identify where to draw. All right, where to draw my Fibonacci extension properly. Okay, so zigzags. All right, they are called the zigzags, and there are two types of zigzags. Okay, one is the regular zigzag, right? So we have, okay, a regular zigzag is something like that. Okay, and then we have the irregular zigzag. Okay, okay, so let me just get this right. Let me just move it properly so you guys can see clearly. So this is a regular zigzag. Okay, and then we have a irregular. Okay, now very simply, can you guys tell me the difference just by eyeballing? Okay, just by eyeballing the two zigzags. What is the difference? Okay, some asking to zoom out a bit. Oh, wait, give me a moment. Okay, I managed to zoom out a bit. Hope this helps. Okay. Okay, I got quite a number of answers coming in. All right, so some of you saying that the base is not the same, some saying no clear pattern, right? One says trend versus sideways action. Okay, another one says it's an uptrend, and one says it's sideways. All right. Okay, so one is bullish, one is bearish. Okay. So we got quite a number of different answers. All right. Now, generally speaking, all right, for those of you who are saying that one is in an uptrend, another one is bearish, okay, that is not the correct answer, right? You can have irregular zigzags in an uptrend as well, okay? This is just a very deep pullback, okay? And this actually, the irregular actually tricks people into thinking that there is a reversal when actually price is still pushing higher, okay? So the interesting thing about regulars and irregulars is to look at the 0.2s and 0.3. Okay, over here, this is the 0.1, right? This is the 0.2, this is the 0.3. All right, same thing for irregular. This is the 0.1, this is the 0.2, and this is the 0.3. Now, look at where the 0.3 ends, right? 0.3 for regular ends, okay, above. All right, in an uptrend, 0.3 for regular ends above 0.1, right? In an uptrend, 0.3 for irregular ends below 0.1. Okay, the opposite is true for a bearish scenario as well, right? Now, by being able to identify these two zigzags, okay, you guys will be able to identify where are the points to draw your Fibonacci extension. All right, so this is my guiding principle. This is how I actually draw my Fibonacci extension. Okay, so in a regular zigzag, I will draw the normal way of drawing Fibonacci to see, okay, both methods are the same, right? Both methods are the same. It's just identifying the pattern to identify the 3 points of the Fibonacci extension, right? So in an uptrend, now we're bullish, right? In an uptrend, I want to see where price will go to, right? So price, if price is forming a regular zigzag, okay, price could very well go to 100%, right? Go to 127. Okay, these are all the possible resistances, okay, possible price targets in an uptrend. All right, for irregular, okay, it's a deeper extension, 0.1, 0.2, and then after that 0.3 ends way beyond, right, way beyond 0.1, the starting point of 0.1, and you actually see that, okay, the levels are also the same, right? You can use the extension to find possible resistances. Now, the thing about irregular, okay, is that irregular zigzags, okay, if you follow Elliott wave theory, right, irregular zigzags normally occur the most often in wave B and wave 4. All right, the most often in wave B and wave 4. So these are really the most complicated waves to trade. All right, but at the end of the day, why I'm sharing these two patterns with you guys is really how to identify the Fibonacci, the points that we use to draw Fibonacci extension. All right, are you guys clear with the two patterns, the zigzag? Okay, so Rajan, you are saying higher high, lower low, higher high, lower low, okay, is regular zigzag. No, higher high, higher low is regular zigzag, or lower high, lower low, regular zigzag. Okay, so this is the bullish scenario. Bearish scenario is something like that. All right, bearish scenario is something like that for regular zigzag. Okay, and irregular is something like that. Okay, so I'm just gonna let me zoom out a bit. Okay, let me zoom out a bit so you guys can see the difference in the pattern. Okay, I'm gonna clear this so it's easier to see. Okay, so the top represents bullish scenario, the bottom represents bearish scenario. All right, is this clear for you guys? Okay, so Joe, you asked a very interesting question, right? So how about a double bottom? Okay, how about a double bottom? Now, very interestingly, a double bottom is not a zigzag. A double bottom is actually called a flat. Okay, so if you actually follow Elliott wave theory, it's a flat. So a flat is the same as a channel, right? So a flat is essentially just like that. Okay, that's a flat, right? So this is a normal flat. Okay, so Joe, I hope that answers your question. Okay, so generally speaking, I try not to use Fibonacci extension on flats. All right, Fibonacci extensions, based on my experience, I realized that they actually work better on zigzags. Okay, so I don't want to keep drawing on lines. I want to show you guys how to apply it onto the candlestick charts. Okay, because application is more important than just understanding the theory behind it. Okay, so Pride, you're asking, irregular zigzags are the ones which has very sharp moves. Yes, generally speaking, you are right. All right, irregular zigzags do show very huge whipsaws. Okay, yes, okay, that is the general idea. All right, but sometimes irregular zigzags happen in the normal market as well. Okay, so being able to identify, okay, normal zigzags and irregular zigzags, you will be able to also identify how to draw Fibonacci extension. All right, so I have the Aussie cat here on the 4 hours, right? And I can already at one glance see quite a number of regular and irregular zigzag. Okay, so we just have to identify swing highs and swing lows. Okay, we have to identify swing highs, swing lows, right? So let's work backwards. All right, let's work backwards. Okay, looking at this, Price comes down, price pushes back up, and price is dipping lower. Is this a regular or is this an irregular zigzag? Okay, regular or irregular? Right? Don't be shy, guys. Okay. Okay. Some of you are saying irregular. All right. The correct answer is regular. Okay. Just let you guys refer again. This is a bearish scenario. So ideally, okay, I'm not trying to analyze the entire trend right now. Okay, I'm just saying that based on this time frame, the 4-hour time frame. All right, let's clear all the trend bias and everything. We see that price is sloping downwards. All right, so it's definitely on a downtrend on the 4-hour time frame. And I've identified one swing high to a swing low, and then price pulled up to another swing high, which is right there right now. Okay, now look at this bearish pattern. Okay, we're seeing the same thing, right? Swing high to swing low, and price pull back up. Okay, so this should be a regular zigzag. All right, so if it's a regular zigzag, then we can use our Fibonacci extension to draw 0.1 to 0.2 to 0.3. All right, and this is how we can find the price targets. All right, I'm just going to zoom in so it's easier for you guys to see. This is how we can find the price targets of this regular zigzag. Right, price could possibly come down. Possibly, I'm not saying it's a confirm, right? Because I'm not doing a proper analysis. All right, so price could possibly come down 61.8, or it could push down to 100%. All right, so this is a regular zigzag. Okay. Now let's work backwards. Okay, let's work backwards. Yeah, let's work backwards. I'm gonna be a bit picky over here. Okay. Now we see this price has gone all the way down, makes a low over here, pushes up. Okay, so a swing low to a swing high, and then comes all the way back down to a swing low over here. Okay, is this a regular or irregular zigzag? Okay, great, fantastic. You guys are catching this pretty fast. Okay, so yep, 100% correct. Okay, this is a irregular zigzag. All right, because okay, for those of you who are a bit confused whether this is a regular or irregular, all right, I don't blame you guys. Okay, this is a bit tricky, but if you change to the closing chart, okay, you can tell, right? 0.1, okay, 0.2, and look at where 0.3 has ended. 0.3 has ended beyond the start of 0.1, right? 0.3 has ended beyond the start of 0.1. All right, 0.3 has ended beyond the start of 0.1. Okay, but if you were to change back to candlestick and you include the spike, right, it looks like, you know, they actually end at the same level. So it could be debated as a regular. Okay, but to have that very clear confirmation, change the line chart, you will know for sure this is an irregular zigzag. Okay, so irregular, we have the 0.1, okay, we have our 0.2, we have our 0.3. Okay, let's draw the Fibonacci extension, right? 0.1, 0.2, 0.3. And look, price drops all the way down, okay, and it pushes up to 127.20, and then after that it continues downwards. Now, some of you can also argue, hey, Isaac, I see a regular zigzag within the irregular. So you're right. Okay, there is a small regular zigzag down here, right? And you can actually also use, okay, zooming in on this area. Okay, zooming in on this area, on this regular zigzag within the irregular zigzag. You can also use Fibonacci extension, right? 0.1, 0.2, 0.3, and you see price came all the way down. Okay, tapped the 76.40. All right, tested it a number of times, extended even to the 88, and then after that it pushed higher. Okay, so this is how we identify regular and irregular. Okay, another one, another one. All right, let's go backwards. Okay, swing high to swing low to another swing high. Is this a regular or irregular zigzag? Okay, so yeah, okay, so the answers are coming very quickly. This is a regular zigzag. Okay, this is a regular zigzag, right? Why? Because look at 0.1, your swing high, 0.1 to 0.2, and where is your 0.3, right? The key is the 0.3. The 0.3 does not end beyond the 0.1, right? The 0.3 actually ends after, okay, after the start of 0.1. So this is a regular zigzag, all right? And you can actually see 0.1, 0.2, 0.3 of your Fibonacci, and price pushed all the way down to the 161.8 extension. Okay, so you guys are starting to grasp the concept, okay, of regular and irregular. Now, I note in one of the comment, okay, okay, Pride, you said, you know, do I mean irregular zigzags are the one with no, this was asked a while back. Okay. Yeah, okay. So Pride, you're asking, do we need to wait for the corrective move? Okay. If you do an analysis as a whole, okay, there are more often than not, the irregular zigzag is the one that is a corrective move. Okay, more often than not. All right. I'm not saying that it is always a corrective move. All right. It is more often than not the corrective move, because like I mentioned earlier, irregulars normally appear on wave B and wave 4 of Elliott wave. Right. If you guys are wave subscribers, if you guys are not wave subscribers, not to worry. Irregular zigzags are telling you that, hey, you know, price is in a consolidation. We could see an explosion and a continuation of a trend, or we could see a reversal. All right. Okay, Christopher, what is the minimum target and what is the typical target? Are you referring to the minimum target and typical target of extension? Okay. When it comes to extension, when it comes to Fibonacci extension, right, there are a few key levels that I want to point out to you guys. Okay, one of the key levels will be the 61.8. Why? Very simply because we're using Fibonacci and Fibonacci extension. We're using Fibonacci extension, and 61.8 is a key Fibonacci number. 100% is also a very important number, right? So for those of you Elliott wave practitioners, okay, you are saying, you always like to say that, okay, wave A, okay, wave A equals to wave C. So A equals C, right? It really means that if this is wave A and this is wave B, the corrective move, then wave C, okay, should generally be the most ideal. Wave C should be 100%, all right, of wave A. Wave C and wave A, time and space wise, should be the same. All right, so 100% is a very, very key ratio for Fibonacci extension. Okay, so Christopher, I hope that answers your question. All right, so let's continue. Okay, Angelo, you're asking wick to wick or body to body. Okay, definitely wick to wick. Okay, I will take wick to wick. I don't draw body to body, right? Wick to wick, because wick is where the price has actually reached that level before. Okay, so Angelo, hope that answers your question. K, you're asking, is extension available in MT5, MT4? Yes, it is. As I have shown, you can actually go to the MT4, MT5 and toolbar at the top. Just right click, select customize. Okay, select customize, especially on this drawing tools area. All right. And if you scroll down, you should be able to see many different kinds of Fibonacci. Okay, there's Fibonacci retracement, there's expansion, right? There's Fibonacci fan, Fibonacci arc, Fibonacci channel. All right, yeah, so Fibonacci time zone, a lot of this kind of Fibonacci stuff. All right, so it is definitely available in MT4, MT5. You can find it on the FP, MT4, and MT5 platform. All right, so I hope you guys are clear on this extension thing. All right, so with these two patterns, okay, when you guys identify these two patterns, right, you guys will definitely be able to know where to draw the Fibonacci, what do you call it, 0.1, 0.2, 0.3 from. Okay, it aids. Okay, as long as you have a clear market structure, all right, you keep the trend line as close to the price movement as possible. Okay, learn to identify whether it's a regular or irregular pattern. Okay, if you cannot identify regular or irregular pattern, most of the time you're going to have a very ugly Fibonacci extension drawing. So best not to use Fibonacci extension in that scenario. Okay, so I've got a few more questions here. Stanley, you're asking, at what point can we establish a sustained reversal? Okay, I'm going to put it out here to say, that, you know, to identify sustained reversal, Fibonacci extension or retracement will not be able to tell you where reversal starts. Okay, the person that can tell you where the reversal starts, all right, will probably be able to scalp off that reversal level, and he or she will be extremely rich. All right, so we at Fibonacci, for all Fibonacci levels, there will be slight reaction. Okay, some levels stronger than the other. Okay, so you can actually use Fibonacci key levels to identify a strong reaction. Okay, so Rabin, Stanley, I hope that answers your question. Rabin, after drawing Fibonacci extension, how far does price goes and come back or returns? Okay, again, this may or may not happen. All right, may or may not happen. Okay, for Fibonacci extension, right? For Fibonacci extension, like I mentioned, the key level for me is 61.8 and 100%, right? I've seen price come to the 61.8, okay, many times, and then after that it reverses from there. Could form a double top pattern, all right, or it could become a triangle pattern, a squeeze, right? You can have a squeeze, right? So many different kinds of patterns can form. All right, so it's very hard for me to answer your question, Robin. How far does price go and how far price comes back? Like I said, okay, Fibonacci extension and retracement should never be used alone, right? It should be used together with a multiple style of analysis, right? Where maybe you combine with indicators, but for me, price action is king, so combine it with price action. Okay. So Robin, I hope that answers your question. Karel, you are saying, can I use trading view when doing Fibonacci extension? Yes. I mean, I've been drawing Fibonacci extension on trading view, right? Okay, so Andreas, you're saying you do not grasp where we start. Okay, for Fibonacci, all right, the starting point. Do we start from point 1, point 2, or point 3? Right, we start from point 1. All right, that is why we have to identify the patterns. Okay, whether it's an irregular or regular, we always start from point 1, right? So let's say this is a zigzag, right? This is our point 1. Okay, if I want to draw another zigzag, okay, this is a regular. If let's say this is an irregular, right? This is an irregular. Let me change the color to yellow. Okay, this is an irregular, right? This therefore becomes my point 1. Okay, so drawing Fibonacci extensions, right? That's why I say as long as we identify whether this pattern is a zigzag or irregular zigzag, whether it's a regular zigzag or irregular zigzag, it will help us to draw Fibonacci extensions correctly. Okay, because we identify the point 1, we know where the point 2 and the point 3 is, right? So we start from the point 1, then we just draw to the point 2 and then the point 3. All right, the purpose of today's webinar is not about telling you guys about directions. Okay, Fibonacci extension, Fibonacci retracement doesn't tell you guys anything about directions. All right, it just tells you, okay, where are the possible support levels, where are the possible resistance level. Okay, after you have done your own analysis to identify the trend, let's say you do your own analysis and you identify that, okay, we are bullish, then you can use Fibonacci extension to find possible take profit targets, right? So, or you can use Fibonacci retracement and use the negative 27.2 as a possible take profit target. Okay, so so Andres, I hope that answers your question. Okay, so Ujwal, you're asking, can I show more example? Okay, yes, I will. Okay, so Rajan, you're asking about what do I mean by price action? So price action is really just looking at candlestick. Okay, we don't look at volume, right? We look at candlesticks, how candlesticks are being imprinted on the charts. Okay, so that's price action. All right, so hope that answers your question. Okay, so Christopher, what is the most consistent pattern for making a profit? The regular or irregular pattern? Okay, my answer to you is it depends on where you get in on the move, right? If you get in on the end of the move, then you're not going to get any profit. Okay, but ideally, as long as there's space to 100%, there's space to a 61.8%, you can capture that that profit, right? So generally, like I said, the strong levels for Fibonacci extension is 61.8 extension or 100%, right? And as long as there's a lot of space to that level, okay, you can capture that profit. So I'm just going to go on to dollar CAD to show you guys a good example of what I mean. Okay, so dollar CAD, I want to show you guys on the monthly, right? On the monthly. Now, on the monthly, there is a very clear double top pattern. Okay, a double top pattern. Not just that, but there's also a clear zigzag pattern, right? Look at that. Swing high. Okay, you can identify a swing low down here, right? And then after you can identify another swing high down here, right? So this becomes your 0.1, this becomes your 0.2, this becomes your 0.3. Okay, let me just move this away. Okay, this becomes your 0.3. You can draw a Fibonacci extension from 0.1 to 0.2 to 0.3 and look at it. Price is right now testing the 100% level. Okay, price is testing the 100% level. If you go down to the lower time frame, like the 1 hour, you start to see that price is actually very choppy in that area, right? You see the 100% level, you see price tested many times, because on the big time frame, this 100% is a very key level, right? So this is how you can combine the different time frames, okay, and analysis and Fibonacci. All right, and this is just by using extension to find a possible, okay, let's say when price was here, you can find a possible take profit here. Combined with graphical, right? There's a last swing low over here. All right, so this can become a support zone, a possible take profit zone, or also a zone where you start looking to go long, right? If you want to play a reversal trade. Of course, within the movement from 1 to 2, there's also a smaller zigzag, right? Another smaller regular zigzag over here. Okay, so Fibonacci drawings are everywhere. Okay, so Christopher, I hope that answers your question. Okay, Rabin, which indicators combine well with Fibonacci, with Fibo extension? Okay, so again, for me, graphical chart pattern, so graphical support and resistance. Okay, I try not to combine indicators together with Fibonacci extension, because indicators are always moving, right? Fibonacci should always be drawn on completed movements. Okay, so hope that answers your question as well, Rabin. Okay, so I have a few more questions. Oh, a lot of questions. Bear with me, guys. Okay, so Magun, you're asking, okay, you have added 23.6 on the box, but I won't show on the extension. You have added levels. Okay. Okay, a very quick one for you, right? A very quick one for you. Okay, so you can actually go to on the left, right? On the 1, 2, 3, the third one. Okay, you can see trend-based Fib extension. You click on it and you just select your 3 points to get your Fibonacci extension out. You click on this gear to show settings. All right. Click on the gear to show settings. And these are ideally the settings that you want to have. Okay. So you have added 23.6. If you highlight it, okay, it should be there, right? If you cannot see, then you can save it. Okay, you can click OK, and it should be there. If it's not there, try refreshing your chart. Okay, so sometimes TradingView is a bit buggy as well. Okay. So K, you're asking, is support and resistance level on Fibo accurate? For me, yes, they are, especially when combined with graphical support and resistance levels on the candlestick chart. Okay, so hope that answers your question. Okay, Christopher, do I prefer to trade the regular or the irregular pattern? If you ask me, okay, I love the regular pattern. Okay, the irregular pattern is frustrating because it becomes a broadening triangle or opening wedge. All right, so when I start seeing an irregular pattern being formed, right, I stay out until it reaches a key level. Okay, or if I'm very sure that this irregular pattern is a wave B, is a corrective wave B or corrective wave 4, okay, then I will wait to enter at a better position. All right, so it depends. Okay, but if you ask me if I have a preference, I prefer the regular zigzag. Okay. Okay, Peter, what time frame do I use if I want to trade every day? So if you're a day trader, right? So you are in the market. Okay, so every day if you're in the market, then the time frame that you want to look at is probably the daily, the 4 hour, and the 1 hour. Okay, so Now that you guys know how to use Fibonacci extension correctly, I'm just going to quickly recap. Okay, I'm going to quickly recap, and I want to move to the last point. Okay, so we need the ideal market structure, which means no choppy markets. Okay, clear movements, right? And then we have to always keep in mind when drawing Fibonacci, whether retracement or extension, always keep the trend line as close to the price as much as possible. And the third point, okay, to draw Fibonacci extension correctly, we need to know where to place point number one. And how do we know where to place point number one? Is by identifying zigzag, regular zigzag, or irregular zigzags. So once we identify regular and irregular zigzags, we know where to place point number one, point number two, point number three comes easy. All right, so with that, we can move on to combining extension and retracements. Okay. So one of you, Angelo, you're actually asking a question, right? Can I plot same type of Fibonacci 2 to 3 extension to determine confluence area? Yes, I can show it to you. Or combination of Fibonacci extension and retracement? Yes, again, I can show it to you. All right, so let's just go to, since we're on dollar CAD, okay, let me just show you guys on dollar CAD, right? Just now I identified on the monthly time frame, okay, there is a 100% extension where price is at right now, right? So I'm just going to put it there. And since that's a support, okay, let's quickly, we also see that there's a swing low, okay, and then price goes all the way up to a swing high. We can actually use Fibonacci retracement, right? Low to high. Now, this is not the best way of using Fibonacci retracement. Why? Because look at how far price has deviated from the Fibonacci trendline principle, right? But why do I still use it? Because on the monthly, this is the only trending movement that I have. All right, this is the only trending movement that I have, and price is mostly on one side of the trend line. Okay, so I can use Fibonacci retracement, and look at that. The 50% retracement falls in line with the 100%. So there's a strong confluence over there, right? We can go down to the daily. Okay, on the daily, I can identify a zigzag, a regular. There is a swing high. There's a swing low. There's another swing high over here, right? So this is a regular zigzag where I have my point 1, 2, 3. Okay, so what can I do? Just draw my Fibonacci extension, point 1, 2, 3, open all Fibonacci ratios, right? And look at that, we have confluence again. Okay, the 161.8 on the daily lines up with the 50% retracement on the monthly, lines up with the 100% extension on the monthly. All right, so very strong confluence level here right now. Very, very strong. Okay, I'm using black for extension and dark blue for retracement. Okay, so let's quickly go down to the 1 hour. Okay, so 1 hour, this becomes a very strong support zone, right? This entire area becomes a very strong support zone. Okay, now we also see that over here there is another zigzag, right? If it's a bit hard for you guys to see, you can always identify it, right? Swing high, swing low, swing high. Point 1, 2, 3. Let's draw Fibonacci extension from point 1, 2, 3. Open all Fibonacci ratios and look at that. Again, we have the 100% extension. I'm going to use this as golden now because we are on the 1 hour time frame. Okay, just want to show you that really this is a very strong confluence zone, right? So this is the level where you can, if you are bearish, you can actually have your take profit over there, right? If you are bullish, you can play, you can close your eyes. If you're a scalper, you can close your eyes because this is a strong level. You can close your eyes and put a buy trade over there, a buy limit order, and just play 10 pips off, right? As a scalper, and you probably take profit already. Okay, so we are actually using multiple Fibonacci extensions and retracements on different time frames, right? And it actually lines up very, very nicely. Okay, so this is really how we can combine extension, retracement over the different time frames, okay, and try to find key support resistance, key support levels, or key resistance levels. Okay, so again, guys, the agenda for today's webinar is not, okay, is not right to identify direction of a movement. Okay, it's really to identify key support and resistance area by using Fibonacci extension. All right, and that helps in your trading to add on to your trading methodology, your trading system. Okay, so as sort of a final chart analysis, okay, a very quick one. All right, Andre has actually requested for pound dollar, so just a very quick one. All right, let's look at pound dollar. Okay, so pound dollar, let's start off with the long-term time frame. All right. Okay, so pound dollar, looking at price movement. Okay, there is a swing low, there's a swing high, there's another swing low. This is a regular zigzag. Okay, you can use line chart and they more or less line up in the same area. This is a regular zigzag. You can use Fibonacci extension. 0.1, take the lowest wick, take the highest wick, 0.2, 0.3, and you can see the price is right at 100% level, very close to 100% level actually. And if you want to zoom in on this area, there is another zigzag. Okay, I will not take this super long wick because this is a very unnatural wick, right, compared to all the wicks around it. Okay, so I'll take 0.1, 0.2, 0.3, open all Fibonacci levels, and we can see that 161 is forming a zone, right? So price is between 127 and 161. What happens if I include this wick here, right? Price is coming close, is holding between 161 and 200%. So this is not the best Fibonacci extension to use because of this large wick, right? So let's quickly go down to the daily. So on the daily, okay, we actually also are able to identify two very large movements, okay? Swing low, swing high, swing low. We can use Fibonacci extension. 0.1, 0.2, and 0.3. And look at that, 38 is quite close to the 100%. This is starting to become a zone. Okay, this is starting to become a bearish zone. Okay, I'm just going to highlight 38. Okay, I don't have 38 here, but just going to quick one in the interest of time. I don't want to hold you guys back for too long. Okay, there's another zigzag pattern, right, that I can identify. All I need is 0.1, 0.2, 0.3. So Fibonacci extension, 0.1, 0.2, 0.3. Open all Fibonacci levels once more. Right, and look at that, 161 is in line with the long-term 100%. Okay. So this becomes a very strong confluence zone, right? There is a retracement, okay? This retracement is not completed yet on the daily because if price moves higher, then my retracement is always going to be adjusted higher and higher and higher. So I don't like that. I would actually draw my retracement on the last completed movement, which is here, low to high. And we see the price is right now testing the 61.80. So we could see a pullback right now, or price may overextend a bit into pound dollar resistance zone, the long-term resistance zone. But not to worry, let's go down to the 1 hour. Okay, so on the 1 hour, we see much clearer, very clear zigzag, right? So 0.1, 0.2, 0.3. Open all Fibonacci levels and look at where we are, okay? 100% and 161.8 is over there, right? Price pushed to the 78.60, okay? And it pulled back, right? So pull back, okay? There is a graphical swing low over here, right? There is a graphical swing low over here. And if I'll do a retracement of this entire move, low to high, okay, this is more in line with the 50% level. Our negative 27.20, negative 61.8 is finding confluence in a long-term resistance area, okay? And we can also draw a channel. I'm just looking for confluence all the way, right? Okay, so this is not the best channel because if I want to be really strict about it, right, it looks like price has already broken this channel. Okay, so not the best channel, right? But in terms of market structure, okay, we have an irregular zigzag here, right? 0.1, 0.2, 0.3. So let's see whether this is a nice level to enter, right? Right now, my bias is to go long into this long-term resistance zone, okay? I want to see whether this 50% retracement and graphical swing low is a nice level to enter. I can make use of this irregular zigzag, right? 0.1, 0.2, 0.3. So this is how I also use irregular. All right, so Fibonacci extension 0.1. As long as we identify 0.1, is nice, seems simple to draw extension. Okay, so look at that. We have the irregular extension with the 100% key level at the last swing low. Right, so 100%, I'm just going to highlight 100% again. Okay, use golden because we're on a 1 hour and this is irregular. Okay, so just a very simple idea. Okay, I will actually put possible trade. I will actually use this as my stop loss, this one as my pending buy limit. Where's my buy? Okay, and then of course, simple possible take profit at the last swing high, graphical. I'm always a sucker for graphical. And then my final take profit can be anywhere inside this long-term resistance area. But for illustration purpose, I'll just use the long-term Fibonacci confluence, right? So this becomes a very nice risk-reward trade, right? And as long as price bounces and comes back up, okay, immediately move to break even, protect my position. Okay, so this is my quick analysis on pound dollar. Okay, current what I see on pound dollar, combining Fibonacci extension and retracement. All right, so very quick analysis. I managed to get it done in the last 5 minutes. Okay, definitely this takes practice. It's not something that just comes immediately just like that. All right, so I'm just going to run through and see whether there are any more questions. Okay, I know some of you are requesting for charts. Unfortunately, in the interest of time, I am unable to, right? But I hope to be able to get to your requests in the next webinars. All right. Okay, so Angelo, you're asking, can this also be applied in stocks? Yes, definitely. Okay, Fibonacci extension, retracement can be applied across all different asset classes. All right, so with that, okay, we have come, unfortunately, okay, like I said, 1 hour is never enough to cover Fibonacci. Okay, I would love to share with you guys, love to share more. All right, if you guys are ever in on the live trading sessions, all right, feel free to fire away and we can also do a bit more sharing on all these other external topics. Okay, so yeah, some of you are asking, is it applicable to crypto? Yes, why not? Let's do a quick look at Dogecoin, right? Let's go to Doge against the dollar. I'm just on a 1 hour right now. I see a swing low to swing high. Okay, Fibonacci, let's go. Fibonacci retracement, low to high. Okay, price came close to a 78.6. Okay, so definitely possible, right? There is this big zigzag on the 1 hour. We can also use Fibonacci extension, 0.1, 0.2, 0.3. Open all Fibonacci ratios, right? Change color, right? You see price has extended 50%. It could possibly go up to 61.8. There's a smaller Fibonacci extension here as well. Regular zigzag, so we can use 0.1, 0.2, 0.3. Open all Fibonacci ratio, you can see the 50% extension. The bigger one is in line, finding confluence with the 161.8, the smaller one. Okay, so which is probably why price reacted there as well. Look to the left, there is graphical resistance. Okay, so yeah, this works on all time frames. Okay, it works on all asset class. Okay, so just a quick recap before I go, right? I really want to come back to the points. Okay, first thing, okay, we need to have ideal market structure. It doesn't matter which time frame you're on, as long as the market structure is clear, right? It helps us identify regular, irregular zigzags. Okay, yeah, it helps us identify swing highs, swing lows, right? Now, best practice, trendline principle. Okay, make sure your Fibonacci trend line is as close to price as possible. Third point, for Fibonacci extensions, okay, for drawing Fibonacci extensions correctly, learn the regular zigzag or the irregular zigzag. And as long as you identify 0.1 and you know what sort of zigzag you're looking at, 0.2 and 0.3 comes very easily and you know where your extension levels are. Okay, and then of course, finally, you put all of that together. Okay, you have actually a very powerful tool as part of your trading repertoire. Okay, so final question from Christopher. Okay, zigzag is typical in wave, no, not wave 2 or 4, right? Zigzag is typical in wave 4 and corrective wave B. Does that not make the system high risk trade strategy as the ultimate outcome is a reversal? Yes, generally, which is why people who trade Elliott wave, they try to stay away from wave 4, right? From my understanding, try to stay away from wave 4 and corrective wave B because it can get pretty messy. Okay, so wave 1, wave 2, wave 3, okay, wave A, wave C's are the best waves to trade when it comes to Elliott wave. Okay, so I think Paul Tudor Jones, when he called the Black Monday crash in the 1980s, right, which really made him legendary. He actually used Elliott wave. Okay, it was in the documentary. He did talk about wave structure. Okay, so he used Elliott wave theory, and that was how he actually called, right, wave A. Okay, because wave 5 was completed, he actually called wave A, and then on the rebound, he said that there could be one more leg down, and that was where he saw wave C as well. So that's for you guys if you guys believe in Elliott wave. All right. Okay, so with that, we have come to the end of today's presentation. Sorry guys, taken so much of your time. Again, I apologize for ending late. Okay, if you guys have questions, all right, please email support@fpmarkets.com. Otherwise, you can always register for the next webinar, okay, on fpmarkets.com trading webinars as well. All right, so once again, thanks everyone. The sun's getting in my eye. It's sunset over here in Singapore. All right, trade safe, stay safe, go back, practice the Fibonacci extensions, retracements. All right, wish you guys all the best, and I'll catch you guys again. Take care.